Are you curious about how Dscr loans can help you crush your real estate investment goals? Stick around as we answer the most frequently asked questions about Dscr loans, what they are, how they work, and why it's a game changer for a lot of investors. There will be some very important tips in this video that a lot of investors don't know about, so make sure you pay attention to this video. Welcome back to the channel. If you're new, we focus on investment content here. Anything with real estate investment content or other investment vehicles. Now let's get into the video. Dscr loans have been one of the most popular loans for investors right now. It's the best thing since sliced bread. And as new investors figure out about this Dscr loan, it blows their mind. Now, let's answer the frequently asked questions. Question number one, what is a Dscr loan? We'll start off with what Dscr stands for, debt service coverage ratio. What that basically means is that you're covering the debt, which is the mortgage, with the rental income. So lenders basically focus on the income generated by the property itself. Of course, there are many other factors that they look into. The Dscr loan does not look into any income documentations or employment history. You'll need a qualifying credit score, down payment, closing costs, and reserves. I made a full video going over what a Dscr loan is, so if you're brand new to it or if you just want a refresher, make sure you check that video out. I'll link it in the description and I'll put it somewhere on this video. Second frequently asked question, can you close in an LLC? Yes, you can close in an LLC. However, you are personally guaranteeing the loan. With some lenders, this investment property will not show up on your credit. With others, it will, even though it's in the LLC name. So that's an important question to ask your loan originator. Documents that are typically needed when you're using an LLC are your EIN document, the operating agreement, and the articles of organization. For the operating agreement, some lenders want to make sure that you are 51% owner minimum. Some are okay with going down to 25%. It's really important to speak to your loan originator about what your operating agreement shows and how they can help you and which direction to take. By the way, if any of you are interested in applying for a Dscr loan or want to go over a scenario, I placed a link in the description below where you can fill out a form and I can contact you to go over this. Next question, what is the minimum Dscr or ratio required for the Dscr loan? Majority of lenders will go with a 1 ratio. And the calculation for the Dscr loan is basically dividing your rent by the mortgage amount. For example, if your rent is $1,000 and your mortgage is $1,000, you divide the rent by the mortgage and you'll get a 1 ratio. And majority of lenders are cool with that. There are a few lenders that are willing to go to a negative ratio to 0.75, which basically means that you're actually losing money every month. For example, let's say the rent was $750 and the mortgage was $1,000. You divide that $750 by the $1,000 and you get a 0.75. And that's the lowest negative ratio for some of our lenders. Now keep in mind, interest rates are typically higher using a negative ratio versus a positive ratio. The higher the ratio, the better the rate. For example, some lenders, if you get a 1.15 ratio, will give you a better rate. Some lenders will have it at a 1.25, and some lenders are at 1.5 and they'll give you a better rate. For the negative ratio, it's not typically used, but I've used it for investors in the past. For example, there's one investor who had a hard money loan. It was, I think, 3.2 million on it. We had to do a refinance for him at a negative ratio because he had very low rents, below market rents, and he needed to get out of that hard money loan. So we ended up doing a 30-year fixed refinance loan for him at a negative ratio. So it really depends on your scenario. So negative ratios aren't typically used, but it does have its purpose. Another question, who can benefit from the Dscr loan? Self-employed borrowers benefit the most because majority of times, a lot of self-employed borrowers have issues with DTI, the debt to income ratio, with a regular conventional investment loan. Cool thing about the Dscr is they don't look into any income documentation, no employment history, which makes it much easier to obtain more properties. And any borrower in general who can't qualify because of their income, because the debt to income ratio is too high. It's also great for investors who have capped their conventional financing. With Dscr loans, majority of our lenders have high caps, some 20, some 50, some even more, for the amount of properties you can have financed at a time. Anyone can benefit with the Dscr loan, even if they could qualify for a conventional. The only reason I would say to go with a Dscr versus a conventional, if you could qualify, is if you get a better rate and you're more focused on the cash flow. Another question is, are Dscr loans only available for investment properties? And that is a yes. You can only use a Dscr loan on investment purchases, no owner occupants. Does the Dscr loan require tax returns or any income documentation? The Dscr loan does not require any income documentation or employment history. They qualify you based on the ratio they come up with the cash flow of the property itself. What types of property will qualify for the Dscr loan? Residential properties will qualify, 1 to 4 units. Commercial properties, anything from 5 units plus. Short-term rentals will qualify, like Airbnbs, Vrbo, vacation rentals. You can also buy mixed-use properties with the DSCR loan. Office buildings, retail space, and other types of properties. A really good question that a lot of people have is, what is the LTV for DSCRs? So what is the loan to value? Let's go over the purchase side. For purchases, for single families, you could put as low as 15% down. With multifamilies, 2 to 4 units, you could put as low as 20% down. When it comes to 5 units plus, it's typically 25%. Now, I've actually seen a blanket pricing with multiple 4 units at a 20% down payment. It really depends on the lender you go with and the deal itself. On the refinance side, there's 2 types of refinances. There's rate and term, and then there's cash out. Rate and term is basically you just replacing the current lien with a different rate. For example, let's say you had a $200,000 property and the interest rate was 11%. You had a fix and flip loan on it, and then you wanted to do a refinance for the rate and term to get a 6.875% rate on the DSCR 30-year fixed. Then you would just do the $200,000 financed. So only the $200,000 gets financed. With cash out, you're actually pulling cash out. So for example, let's say the property was worth $500,000, you have a $200,000 lien on it, and you wanted to do a $300,000 cash out. $100,000 would be the cash after the lien has been paid. So with rate and term refinances, you could typically go up to 80% loan to value. So if the property, for simple numbers, if the property was worth, let's say 100,000, then you'll get 80,000 max. Now keep in mind, majority of DSCR loans don't typically go under 100,000. There are a few lenders willing to do it, but majority of lenders have a $100,000 minimum. With the cash out refinances, you can typically do 75% LTV with majority of lenders. There is a lender out there that I know that can do an 80% cash out in certain areas. Keep in mind, the higher the LTV, the higher the rate. The lower the LTV, the better the rate. Same with the down payment on purchases. If you put a higher down payment, typically you get a lower rate. Another frequently asked question is, what are the interest rates for DSCR loans and how do they compare to traditional investment loans? So it really depends on the market. There are sometimes I price loans with a DSCR loan and conventional investment loan, and the DSCR actually has better pricing. Now this depends on the market, depends on the time, there's so many factors. Depends on the ratio of the property, the down payment, many factors. And there's been a few times where the conventional side has better rates. Now on the DSCR side, there are multiple factors that affect the interest rate. For example, the loan to value will affect the rate, the credit score, the ratio that you have, and the type of property. I'll be making another video going a little bit more deeper into details with the interest rates. So make sure you subscribe and hit that notification bell so you don't miss out on that video. What is the maximum loan amount that I can get with a DSCR loan? Now this depends on the lender we choose and the type of deal you're working with. Another very important question is, how is the rental income calculated for the DSCR loan? So if you have a property and you have it currently leased, let's say it was leased at $900, okay? Now, when you do a loan, anytime you do a loan, there will be an appraisal that has to be done. An appraisal will find out what the value is of the property, and they will also find out what the market rent is. Now, let's say, for instance, that the market rent came back at $1,000. We already know that the lease is $900. The lender will go with the lower of the two. So they'll go with that $900 even though the market rent comes back at $1,000. So make sure you have the market rents if you want to get the maximum LTV and a really good ratio, depending on the deal, of course. So that is an important factor when it comes to doing a refinance or a purchase. If the property is vacant, then they'll go with the market rent on the purchase side. If the property is vacant on the refinance side, they will typically want an explanation on why it is vacant. Another question is, can I use the DSCR loan for a property that is vacant? For the purchase side, yes. The lender will have an appraisal done and they'll go based off the market rent. For a refinance, if you're in between tenants and you're doing some renovations, yes, you can do it without affecting the LTV. Some lenders will not do the loan if the property you own on a refinance is vacant. And some lenders will give you a 5% LTV cut. So if you have a good explanation on why the property is vacant, then you'll be okay. And then they'll go based off of the market rent. Another great one to pay attention to is, what if the property does not generate enough rent to satisfy the DSCR ratio? Now there's different solutions that you could take to solve this. The first way to solve this is to try a negative ratio to see if that will work. Keep in mind that this will give you a higher interest rate. However, it will get the deal done. Second solution is a rate buy down. You'll buy down the rate so that your monthly mortgage payment is less, and that will potentially help, depending on how far off you are. Third option is to do a higher down payment. a higher down payment will decrease your principal and interest. And depending on how much of a down payment, let's say you did a 5% extra down payment, it typically will help your interest rate as well. So it will lower the interest rate, and of course the principal is lowered, so the monthly payment will be even lower. Another option is to do an interest-only loan. So because you're taking principal out of the equation, only paying the interest, that will help you with qualifying for the Dscr loan. Some situations you may have to do a negative ratio, a buy down, and a higher down payment. If you really want that property, now that property will have to be worth it. It'll have to have significant equity, or you have a long-term tenant that had like a very, very low rent, and you know that rent can be significantly higher. Another common question that we have is, what is the credit score requirement for the Dscr loan? I would say 700 is a great credit score to be around because majority of lenders work with that. When you get under 700, some lenders will start increasing the down payment requirement or cutting your LTV on the refinances. But there are some lenders who want to do 680, some start at 660. I've seen them go all the way down to 620. Keep in mind, the lower the credit score, the higher the interest rate. Another common question is, what are the closing costs for the Dscr loan? So I always tell people closing costs is estimated to be somewhere between 4 to 6% of the loan amount. Now I'll break down some of the things that closing costs are made of. They have the origination fee, you have the processing fee, the underwriting fee, there's prepaid fees such as your homeowner's insurance, your taxes, there's escrow fees on purchases. Some states have attorney fees if you choose to use an attorney. And sometimes you're required to have a collateral desktop analysis fee. Once you apply for a loan with a lender, they'll send you a loan estimate to break down all of these fees for you. Can Dscr loans be used to refinance your property? Yes. There's two types of refinances: the rate and term refinance, and then the cash out refinance. Cash out refinance, like it says, you're pulling cash out. The rate and term is just refinancing the current loan to a different interest rate. The max LTV for cash out refinances are typically 75%. However, I do know a lender that's willing to do 80%. On your rate and term refinance, typically 80% is the max. Are Dscr loans available for short-term rentals? Yes, you can use it on Airbnbs, vacation rentals, the Verbos, but keep in mind the calculation for the rental income can be slightly different. Depends on the lender you go with. You have three options. First option is you can have an appraiser do a market analysis on the short-term rent. The second option is you could provide a history of short-term rental income on the property if it has one. Typically, you'll have to go back 12 months. And the third option, depending on the lender you go with, some lenders are willing to use AirDNA's income calculations. Can I use a Dscr loan to purchase an investment property in another state? Yes, you can purchase investment properties in any state you want. You do not have to live in that state. Another question that not a lot of people know about is, does the Dscr have seller concessions? So there are some lenders that are offering 3% seller concessions, which means you can leverage 3% of your closing costs. Some lenders even offer 6%. So it's important, if when you build a relationship with your loan originator, to go over how much you want to leverage. If you want to leverage as much as possible, then they'll come up with a plan for you. The lowest down payment possible, highest seller concession possible, and even using the CLTV, which is combined loan to value, which I'll be getting into more detail on in other videos. Another question is, what documents are typically needed to start a Dscr loan? So the documents typically needed are your ID, homeowner's insurance quote on the purchases or homeowner's insurance policy on the refinance, a purchase contract if it's a purchase, a lease agreement if there is one, proof of primary residence, so a utility bill could satisfy this, or a mortgage statement, as long as it shows your name, the property address that is being mailed to, and the subject address all being the same. An application filled out, and then once it's submitted, you get a conditional approval, which has a list of conditions that you need to satisfy. I'll be going over common conditions in other videos, so make sure you subscribe and hit that notification bell. How long does it take to close on a Dscr loan? Dscr loans take about 4 weeks on average to close. For refinances, the fastest I've closed one is 2.5 weeks. It really depends on how fast the appraisal moves, how fast we get conditions from you, and what conditions the lenders even need. And as you work with an experienced loan originator who dealt with many conditions and knows typically what the lenders will look for, you'll close faster because some loan originators like myself prepare for these conditions. So we know what's gonna pop up and we have it ready. Can I qualify for a Dscr loan if I'm self-employed or retired? Yes, there is no employment history required at all. No income documentations at all. This is an important one for newer investors. Are Dscr loans suitable for first-time investors? Not typically. Majority of lenders don't want to work with first-time investors. if you don't own a primary residence. If you own a primary residence, majority of lenders are okay with working with you. Now, if you don't own a primary residence and you're trying to get an investment loan, majority of times, if a lender is willing to work with you, you'll have to put a higher down payment down and sometimes come up with a good letter of explanation. Now, if I was a first-time home buyer and I wanted to invest as well, I would focus on getting a 4-unit and moving into one of those units. And I'll be making a video going over the type of loans you can get, like FHA or conventional, and how to leverage as much as you can. So if you're okay with moving into a 4-unit and renting those 3 other units to generate more than enough income to pay your mortgage and then some, then that would be the best strategy to go with. I believe this is the best strategy by far. And anyone that's looking to get into this space should start like that. I would say get an FHA loan, get the maximum amount of seller concessions to cover your closing costs, and put the lowest down payment possible. This is an important question asked by almost every client I have. Is there a prepayment penalty on the Dscr loans? Yes, majority of Dscr loans have a standard 5-year prepayment penalty. Now this can be either a step down or a straight 5-year prepayment penalty. What I mean by that is for the step down, typically you'll pay 5% of the remaining loan amount if you sell, refinance, or pay more than 20% of the loan amount within the first year. Second year, that penalty goes down to 4%, then it goes down to 3, 2, and then 1. With a straight or flat, you're 5% every single year. Now I made a detailed video going over the prepayment penalty and what my thoughts are on it. I'll put it somewhere on this video or I'll put it in the description below. Another question is, how is the market value of a property determined using a Dscr loan? So there's a few investors I work with that think they'll go based on an investment approach, but majority of lenders will go based on a sales comparison approach. Basically, what they'll do is they will pull up the most recent sales in a certain radius around that property. They'll find out what the price per square foot is and look at the upgrades or downgrades and compare the properties. Then they'll come up with a price per square feet for your property. And that is how they find out the value of your property. Of course, the appraisal goes into a little bit more detail than what I just mentioned. Can I use projected rental income on a property versus current rental income? With a Dscr loan, they'll go based off of the current rental income. So if you have the property rented out right now for $900 and the market rent comes back at $1,000, they'll go with the lower of the two. Now, if you're asking about projected rental income after renovations, they will not go with that. They'll go based off of the as is. What are loan terms for the Dscr loans? Now, there's many different types of terms. There's 30-year fixed, 30-year interest only. There's a 40-year fixed, 40-year interest only. There's ARMs as well. Another very important frequently asked question is, are reserves required with Dscr loans? Yes, it depends on the loan amount and the lender you go with. Majority of times, if you're looking at a property around 250 or under, you typically will have 3 months minimum reserves. Some lenders may require 6 months, some even 12. There's a lender I even work with that requires 12 months of every single property you own. Typically, when you hit the 500,000 range, you'll need 6 to 12 months of reserves. Reserves are basically excess money in your bank account that covers the mortgage amount. So if the mortgage amount was $2,000 and you need 3 months, it'd be $6,000 extra after closing costs and down payment. Can I use the Dscr loan for mixed use properties? Yes, you can. Typically, interest rates are a little higher than if it was just residential. The down payment requirements will be more than if it was a residential. So if you had a 4-unit residential property versus a 3-unit and 1 commercial, the mixed use is typically higher in interest rate. What happens if my Dscr ratio falls below the requirement after closing? Now that's okay. You don't have to maintain that ratio. The main thing is that mortgage payment is being paid on time. Now, those are some frequently asked questions that we went over. I'll be making a lot more videos and different tips about the Dscr loan and other investment products. I hope one of those standed out to you, or hopefully one of them gave you a little bit more knowledge to help you with your Dscr loan. If you had any questions on any of those that I went over, feel free to comment. I'll be making a lot more videos. If you have a topic you want me to go over, comment, put it in there, and I'll be happy to make a video on it. And remember, if you want to apply for the Dscr loan, click the link in the description below. It'll ask you to fill out a form, and then we will reach out to you.